Hello and welcome to Investing Confidential. A lot of data came out this week. A lot of data came out today. They're celebrating. Wow, jobs, the GDP. I mean, inflation is going down. Everything's wonderful. Well, it's not. But the market ain't going down. It's not going down, folks. It's not going down. As much as we'd like to see it go down and represent what's really going on in the economy, it's not. And I'm going to tell you why. Okay. Let's start with these numbers. GDP. Okay. The GDP came out days ago. When you analyze this number, folks, here's the real scam. Okay. And it's a scam. And here you see it. They celebrated a massive GDP. The actual number, okay, in dollars was, as you can see, 326 billion. That was how much we generated in GDP in the fourth quarter. But look, how did we generate that GDP? Here you see deficit spending and money printing. Okay, debt. So to generate, what was it? 3%. It doesn't even matter anymore. This big GDP number. We had to spend a ton of money, right? 500 billion to generate 325 billion. And we had to just borrow tons of money, massive increase in debt. So the economy, the White House, because this is politics, okay, plain and simple. We are in a political year, is spending tons of money. They're printing tons of money to generate a little bit of GDP. Okay, we strip all this out, you strip the government spending and the debt increases, and we're negative. We're in recession or barely growing. That is the real reality. That's why most of us look at see what these morons are telling us. They're telling us the economy's booming, and we're like scratching our heads. That's because Wall Street and the government, they're all in cahoots. It's not a conspiracy. There's a fact. They want the S&P to stay up, and they want to generate growth with massive debt. It's unsustainable, folks. What you're looking at here is unsustainable. Eventually, and it could be 6 months from now, nobody is going to want this debt, and the dollar is going to plummet, and then we're going to go into a deflation like we've never seen before, and there's nothing the Fed could do about it. Nothing the Fed could do about it. Okay, so that's what's really going on, as you can see here. Then you have, I'm not even going to show a chart on it, and you have this job numbers that came out today. This is a fallacy. 300,000 plus jobs created, blah, blah, blah. Well, folks, what they don't tell you is the revisions. Again, going back, these numbers are so fake because they're constantly being revised lower. And what they don't tell you is there's a huge, now you can see the numbers now, there is a huge difference between jobs and employment. What is employment? Employment is full-time jobs. Employment is going down, but jobs are going up. What does that mean? That means people are taking part-time jobs in all of these industries, healthcare and all these, they're taking hourly, low-paying part-time jobs just to pay for the inflation. So it looks like, oh, they're booming, jobs. No. Jobs are not employment. When you see this number, you have to just say, wait a minute. What's employment? Is employment going up or down? Well, in this case, employment's going down. But yet, Wall Street and the government celebrating jobs. Okay, and look, the leading indicators don't lie. Okay, look at leading indicators. I mean, they're as bad as they've ever been, and every single time leading indicators are down. I showed this one before. Down at these levels, we have a recession. Now, right now, recession doesn't look likely, based on the numbers based on the fake numbers that are coming in. Doesn't look likely. But the reality is, our leading indicators, not the fake government numbers, the leading indicators are pointing to a recession happening now. And if you, again, without the massive debt that we're piling up, we'd be in recession. I just showed you. It's incredible. And then, but then I got to give Powell and the Fed something, folks, because they're not going along with it. Though I told you, I think Powell's a dove. I think he realizes his legacy on the line, and he's not going to cut rates. He's not going to fall into that trap. Maybe yet. He wants to see another couple of months of data. Okay, there's a possibility that we all know that crude oil is going to explode if we launch another attack in the Middle East. And look, folks, we're supporting Ukraine, we're supporting Israel, and now could be attacking Iran. These are three different things, by the way. They want you to see it's three different things. And then we've got China, who can rattle the swords in Taiwan. I don't think they're going to do it, but they could. And if I was them, I would, because I'm sorry to say, but we're screwed. And so realization is there's no Fed cut in March, excuse me, there's no chance. In June, possibly, but not in March. Not in March. But at the end of the day, when you see here the result of these manipulation of our numbers for an election year, okay, to reelect this current White House, we are ramping up a massive debt. If I was a young person today, I would be shocked. I would be horrified, because in the not so distant future, in the near future, there's going to be hell to pay, because our interest payments now are beyond comprehension. Okay, this chart doesn't even show. They're over $1 trillion, folks. They're over $1 trillion, and they're going higher. I just showed this because, but I'm telling you, the real gross interest payment is over $1 trillion. That's more than our defense budget. That's more than anything. It is absolute disgrace. Okay, and look, here's the real economy. Home sales, lowest in 30 years. Now you could tell me, oh, there's no supply and the interest mortgage. Doesn't matter. The fact is a fact. They cannot manipulate this number. They can't manipulate it. And you know why it's going to get worse? Here. Remote work, folks, it's going away. Part of the big companies. If you work for one of the banks, if you work for a large company, and you moved out during the pandemic to a nice location, you overpaid for a house, you're going to get a notice, if you haven't already, to come back or lose your job. This is going to result in higher supply of homes for sale. Because, by the way, and I'm not going to continue to show this, the layoffs in the tech industry and the banking industry, these are high paying jobs, is massive. Massive. It's off the charts. No one's talking about it because unemployment's 3.7%. Fake. So the combination of massive layoffs, the end of remote work for people that are in large companies, will result in big increases in real estate supply. And what's that going to do to home prices? Send them lower. Mean reversion. I don't care what mortgage rates do. Irrelevant. Mean reversion. That could be a good thing. For those who don't own a house, it could be a good thing. But overall, it's not good for the economy. It will result in lower consumer confidence, recession, et cetera, et cetera, et cetera. And then, we talk about inflation. And let me show you this one chart here that will lead to two charts actually that are going to lead to increased inflation or more pressure on inflation along with energy prices here. New York restaurant workers. By the way, how many of you gone into a Starbucks, gone into anywhere? You pay for any little thing. You go into a gas station nowadays. You pay online with a card. Tip. They want you to tip. Tip, 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 tip. Look, I've traveled around the world. This is the only country left in the world where the restaurant owners are exploiting their workers and hiding it behind this whole tip nonsense. We need to get rid of tips, folks. I'm sorry. It's got to go. Restaurant owners need to pay a living wage from now on. Consumers are pissed. Consumers don't like it anymore. They're getting angry. I don't know about you, but I'm tired of tipping. I really am. Because I go to Europe, I go to Latin America, Asia. There's no tipping. You get your bill, and that's the bill. You pay it. The workers work hard. They're happy because they're getting paid a living wage. And so this, by the way, in the initial stages of it, when tipping's going to go away, it's going to go away. And it's inflationary because initially what's going to happen is the prices of meals are going to go up to compensate because these restaurant owners are small business owners. They're going to have to adjust. And it's inflationary. And the other thing that's inflationary, as you can see here, is we've got a real problem, folks, in our society. And I point this out. It's a huge problem with theft, massive theft, and it's politically driven. And why I say politically driven? Because since the pandemic, nobody wants to arrest anybody, especially in the inner cities. You can commit crime and they let you go. Within an hour, you're out in the street. You see it in New York, Chicago, Los Angeles, San Francisco. It's happening. And going back, again, this is a finance show. So look at the impact. Since before the pandemic, it's almost triple the amount of shrinkage. Shrink is the term in retail they use for theft. Plain and simple, theft. And it's starting to get felt in the bottom line. Nordstrom's, Home Depot, you've seen the numbers. I'm not going to go through it. I've talked about this before. But this is just to show you. And the reason I mentioned today is obviously, I don't know if you saw this, but we have politicians coming out and claiming that the closing of stores in the inner cities is racist. No, it's economics. I don't care if you're Walgreens. I don't care if you're Nordstrom's, Whole Foods, which closed in San Francisco after 1 year. These companies, you just can't open up a store and give everything away. And that's basically what's happening. They're just every day they're getting ripped off. Every day workers are getting assaulted, So they're all closing. And why are they closing? Because the police they put handcuffs on the police, the politicians. And the criminals know this. They're not stupid. Criminals aren't dumb. They're not dumb. You can go in and steal something and you can't get arrested for it. You just keep stealing. This is what's happening. And guess what? This is inflationary. Why? Stores, chains raise prices to offset shrinkage. And then when they leave, the incumbents that are staying, the small businessmen that stay in these little cities, in the inner city, in these small bodegas, they call them, they just jack up their prices. That's why you see people in the inner cities complaining about prices all the time. Whose fault is it? Is it the criminal's fault? Well, yeah, sure. Is it the politicians' fault who don't allow the police to arrest people? I put it on the politicians. But the implications are inflationary. And finally, I just want to close with, you have this phenomenon that is also inflationary, by the way, but also is really bad. And it's the saga of New York Community Bank. Now, I'm showing you bond prices. I'm going to tell you one in a second. But if you're not following up, New York Community Bank is a regional bank that took massive write-downs in their commercial real estate portfolio. Remember, the largest exposure to commercial real estate around the country are regional banks. They're not the city banks. They're not the JP Morgans. They're regional banks. And the stock got destroyed. I don't know how much it's down, 60%, whatever. It doesn't matter. This is what matters. Whenever you have situations like this, it's the bond market that only matters, not the stock market, the bond market. You need to watch the bonds of small regional banks. Right now, what the bond market is telling me, there's a problem, but it's not a big problem. When these bonds go under 70 cents in a dollar, that's when it's over. That's when it starts affecting the real economy. Not today, but this is what you have to watch. Because potentially, these bonds start to plummet. That means these banks are out of business. What does that mean over time? That means we're going to have a massive concentration in the banking system. 10 banks, 12 banks, 15 banks left. All these small banks are going to go. People are going to pull their money out because they're afraid. You think the powers that be like that? Of course they do. We are headed for a system, financial system, that's closer to Brazil, Mexico, and Asia than we are the West. A massively controlled banking system. And once the banking system consolidates into a small amount of banks, then they're owned by the government. There's no competition. Then they're owned by the government. So this is where we're headed. Watch the bonds. New York Community Bank Corp. Right now, bond market is telling you everything's okay for now, but watch the bonds. And with that, you investors, as always, be careful out there.